Testing. Mic check one, two, check one, stretch two. What's good, y'all? Bitch ass niggas. Um, Welcome to a new video. This video is gonna actually be a little different. This is not gonna be a road. This is gonna be another road to profitability. But I want this to be an educational video, and I want to give like something that kind of helps me when I'm trading in like the New York AM session. Oh look, you wanna take this off? This is something that helps me when trading in the New York AM session, and it's to how do you professionally set up as an ICT trader for the New York AM session, right? So I'm gonna give you guys some things that I do, um, and I didn't record it. I did have another wing trade of $720. That's the second day of what you call it. That's the second day for until my for the out of the 5 days until I get my first payout. I don't want to make this video too long. I try not to, so you're not sitting here and watching this for a long time. But I think this will be very educational for somebody and will help you be more organized when it comes to approaching the charts. So that I think organization is probably the best thing you can do use because a clean setup is not the trade that you take, it's how you actually set up for the New York AM. And I think will help you a lot if you trade ICT. So you can kind of give a good, a good you have a good idea of like what's going on and you have it set up to where it's like, okay, I really want to see this enter in this and then want to see off that, see the reaction off this is the level right here, this is the level for this, these are previous day lows, previous day highs, Asia highs, London highs. I'm gonna teach you how you should actually want to set up your chart so that when coming to the market, it's easier for you to have to approach your model, your strategy, and you have the confluences behind it are right there in your face and they align, um and they I don't know what's the word for it, but it'll help you. You know what I'm saying? I'm gonna keep it real with you guys. I ain't gonna sit here and try to I don't even pre-write what the fuck I'm gonna say. I'm just kind of just gonna give you what helps me and I'm gonna tell you why it helps me. So first things first, I'm actually going to go and I'm probably going to I'm gonna go on replay, and I want to really. What day do I truly want to do? I think I'm probably gonna do. What was this day? I'm gonna do this day, for example. This day was honestly. Oh, actually, let me go to Wednesday. I'm gonna do Wednesday. I wonder if Wednesday gave me something. Wednesday at this time, 9:30. Let me see here. Okay. So what we're gonna do, I'm gonna bar replay this all the way back to like 9:15, so it's not. Sometimes you'll see the move already happen before you fully even set up for your freaking replay. Um, but yes, so let me show you how you should want to set up for the New York session if you're bullish or bearish, so that you know where you truly want to be at in the market and how you should want to see your setup, where the market should lead to get to your setup. If that makes sense. So you're going to do actually a couple of tweaks. You're going to actually make some presets and you're going to use these presets so that you know where it's what, you know where the low Asia, the session liquidity, you know where the daily liquidity, you know where the weekly liquidity is at. It's going to set you up so you can choose whatever color that you want, let it match your canvas, and we can go from there, right? Whatever look good for your canvas. So usually, right, we have the Asia high put in here, right? My session liquidity is always red. I have it always as red. Um, this is this one will be orange, right? This is for me. I have it as orange. This is for the 8:30. I'm gonna write this down, put this down for you. The 8:30 to 9:30, right? If you trade ICT, He has the name for the 8:30 to 9:30 manipulation. That for me, I have it as orange. Session liquidity is in red. My bad. I'm gonna actually do it like this, and that's going to be red. Now, why do I have it like this? For one, professionalism. Being my bad. I don't even know why the fuck I used that word. Just for one, being professional, right? When it comes to like being in these charts, right? It looks a lot better because it's like you'll see like okay, if I want to trade maybe lower, I'm coming for the 8:30 lows. I can automatically just see and can just see that like this is what's down here, right? Compared to like Tuesday, and usually what I usually do, right? If it's a previous day's low, my previous day's low. Oh my god, my previous day low colors is in blue, right? So it's like I can come to the market and be like, okay, do I want to hunt for? And before I get to that, I have it all like this. I don't know why it says previous high, but it should be the daily. Um, uh, it should be the daily level, so that like I can say like, okay, do I want to hunt for the 8:30, 9:30 high or low? Do I want to hunt for the Asia highs or lows? Do I want to hunt for the previous day highs or lows? And I know exactly where they're at. A lot of times, right, when you're marking up your charts, you're marking it all like within the same color, and you forget where everything's really at. No matter really where you have it, even if it's like the daily candles under the session liquidity, but you'll probably forget that like that's the session liquidity right there. And you can also use that for um, where you want to see areas of manipulation. And I'm putting blue. And have your colors set like this. It's going to help you because when you are coming onto the charts and you're coming into the New York session, right? If I'm wanting to, let's say, be bullish, I want us to sweep these 8:30, 9:30 lows, and I want to sweep previous day's lows. I know what they're at, right? Maybe below previous day's lows, we have a higher time frame imbalance. So I want to come for that area. I want to see these two areas get taken out and then move to the other direction. But we're bearish here, so it's not going to do that. And if a session liquidity is already been taken out, right? You can put session liquidity already taken as a template, and what you're going to do is have that template be the dash line, right? So you know what's already been taken out. You can use these as take profit areas. If the London session liquidity, let's say, is already been taken out, and let's say you're up here and you want to bearish, you don't have to come for the 8:30, 9:30 low. You don't have to come for the daily low. You can simply come back for the where the London low was at, and that got taken out, right? It just depends on where you want to be. Then what? If you guys know what turtle soups are, Judas wings, I'll make a video on that one day. If not, you can just basically take what was the most recent for the daily session. You're gonna mark out your equilibrium. This is what you'll do. Daily session, the daily and I call it daily. I don't know why I say daily session, but the daily swing highs and lows before my bad. Intraday swing highs and lows. I'm gonna do that. Intraday swing highs and lows. Mark for yeah, take your intraday swing highs and lows. Use the Gann box and find equilibrium. This right here, this part right here really helped me like not just want to take anything and actually sit there and actually wait for something. So sometimes in intraday, right, you're gonna have these swing points, right? So we have a swing point here. This is Asia session swing point. And then right here we have the 9:30 session swing point. Oh, oh, lead. Oh, lead daddy. That was a big boy, wasn't it? Alright, check this out. You have your swing point put in right here. From here to here, you want to mark out your 50% zone. This is mandatory. You need to know where you're at, honestly, precisely in the intraday um, during the intraday, right? If you're an intraday trader, if you're trading that, if you're trading 930, right, and you can make it. I have my equilibrium as white, so you can make it like. Do I wanna? Okay, before I get to that part, you can mark this out as a London high, as a session liquidity, right? You can mark that out, but me, I go for the 2 a.m. to 5 a.m. kill zone. Technically, the London session is from 3 to 8. The 5 a.m. is the most volatile because that's technically our like it's pretty far apart, of course, but that's taking like their 2 to 5 is like our 9:30 to 11, or the 7 to 11 kill zone. Where 7 to 11 kill zone, I mainly trade a lot. A lot of times I don't really trade the New York AM. I really just started kind of coming back to it, but I mainly place a lot of my trades in between 7 a.m. to hold on, I got sneeze. I'm usually my bad, y'all. I'm usually placing my trades in between 7 a.m. and to 8:30. So a lot of times I'm looking to catch like this kind of move here, right? We're bearish. We had a 15-minute fair value gap. Let me see, was that an hourly or? Okay, that was hourly fair value gap. So I would have wanted to catch, this move right here, and right, that would have been my short down here. Um, when you have your chart set up like this, you know exactly what you're looking for. You know exactly what area you want to come to. You know your equilibrium, right? So if you trade ICT, you should automatically know that you want to come back here or be in the premium. A lot of things these people don't really teach y'all that is yes, people always say use discounted premium. People always say your biggest thing you need to have honestly is discount premium. I think anybody, depending on how you're trading, whether it is support and resistance, supply and demand, or EMAs, there's a lot of people that don't like ICT, but a lot of people that I will say that use anything of ICT is either fair value gaps or premium and discount. So since I'm bearish here and I notice that we're in discount, this is the level or above I want to just be bearish at personally because and I'm not blind to it, right? A lot of times y'all are just blind to this. You're not actually really realizing where your 50% is actually truly is. The intraday 50% before New York session. Sometimes there's not going to be a swing point. You'll actually have to sit there and wait for the market to create that swing point and use the 15-minute because, like I said, we're in 15-minute, 4 hour, 15-minute lines together, and then you got the hourly, the hourly that goes. The rule of thumb is you technically want the 4 hour, the 1 hour, and the 15-minute to all align in the same direction so that they can go, so that you can see what technically is the best confirmation that you can get is when the 4 hour, 15-minute, and the 1 hour aligns with each other. That's true, like confirmation of the direction that we want to go. Right. So I usually use 15-minute, and if there's not one, wait for one to get created, and then use that as the equilibrium. Right. You do not want to be shorting these markets right up below here. Sometimes it's going to happen, but that's why I trade the US 30 because US 30 is more likely to hit the equilibrium or above. There will be sometimes, and I'm going to let you know this right now. There are going to be sometimes where we have this zone marked out. Let's say we're bullish. We're just going to clear this, and then we're going to go back up. Guess what? You can keep these. Let's say we take out the 830, 930 lows. Let's say we take out the 830, 930 range lows or highs and previous day's lows. You can already have these marked as okay areas that have already been taken out. Don't delete them, right? A lot of times you don't want to. You can still use them as TP levels, right? So let's say if we go here, market opens. Oh my bad. Hold on, let me fix that. If market opens and we go above, let's say we just completely drop. Oh damn it! Hold on. Huh. Let's say we just completely drop, right? And then I kind of get my move right here. Guess what? If my move is right here, I don't need to aim for that session liquidity. Um, on the other side, yes, it'll be more profit, but in reality, I could just aim back to what's already been taken out instead of just because sometimes yes, you never really truly know, right? If we're going to actually go here and then go back lower, or how far we're going to go. We gotta think, right? It's NQES and the US 30. I'm gonna tell you something about all three of these pairs. For one, the US 30 is always gonna be that pair that's gonna take out the harshest. It's gonna always be that pair that has the harshest volatility, which means that they're always more than likely to take out previous day's highs and lows, weekly highs and lows, and session liquidity way before Nasdaq and ES ever does it. All majority of the cases. I'm going to tell you right now. Don't ever think to make a switch to the US 30. That's all I'm gonna say. That will be for later videos. Um, on why the US 30 is way better than Nasdaq and S&P 500 any day. And in my opinion, I think US 30 and the S&P 500 is to me probably the best you can get. I think Nasdaq is probably the third. It's the lowest, in my opinion. Because like ES is always a slower moving pair, subs are always more guaranteed, and you have a higher chance of your sub really playing out, especially with the way the S&P 500 truly is. Nasdaq is always the last one. Like Nasdaq, you're more likely to get manipulated when it comes to Nasdaq. They go for stops by session stops a lot more than the US 30 and S&P 500 does. I don't care what anybody say. So let's start this session and let's see how it kind of goes, right? So the last thing you want to do is mark out your, and you can. This is very optional, but you can mark out one fair value gap. If I'm bearish, I'm only caring to mark out one fair value gap, or at least two, right? Maybe you have this one, right? Because that's where the session liquidity at, and so you probably want to mark out that hourly. Or, and mine is in blue, like I said, depending on how chart colors is. You have this 15 minute. You don't want to mark out this one because this is in discount. You want to mark out this one because this is in premium, right? Sometimes it's going to happen. It is okay. So let's see what happens when we mark it out. I mean, when the session starts, session opens up, we smack equilibrium, right? That equilibrium was at this inefficiency, but actually, and I take that back, right? Because as I just thought about this, because I did take this trade, you can use this. Why else can you use this? Rejection block, right? You can use this. We hit 50% or a little bit below it, but it's at the equilibrium. Um, and you can kind of see like how the market kind of just reacts. And let's say whatever your model is, whatever your strategy is, if you hit this zone and you see your model appears, take it. You don't need to see a session liquidity sweep. If there is a rejection block, you don't need to come back to the fair value gap. Your best thing you can do is come back to the equilibrium. Majority of the cases, those fair value gaps want to be there, and you can use those. And look what happens with the market, right? We come back and we hit all those levels. Let's see, do we come back up here? Let's see if there was another setup opportunity here, right? We have another 15-minute fair value gap. Are we gonna come back for these lows? And we come back for those lows, right? If you want to be bullish, and however you want to be, you can see it. Let's say, look, we got this IFVG here. Let's say you had a trace up like this, right? IFVG here. Remember what I told you? So at these lows, look, you can target all these. You don't technically need to target up here. That's why I say keep these levels, right? Because you already know what's already been taken out. Keep these levels so that if you are trying to get out, get a quick trade in and get out, you can come back to these levels, right? So that's true confirmation right there, right? And then align that. Let me see, was there SMT on this day? There was, right? Higher time frame SMT here. Well, higher time frame SMT. New York session SMT here. Put in here. As soon as market opens up, if we go low, right, we hit the equilibrium. And my SMT, I usually have it as sequential, and my sequential SMT is in purple. I might change that though because I have a different chart layout, so I'll probably make that, put that as yellow. And I know I have the idea of where I want to see the market move to first, and then go in the other direction. So let's do one more. Let's Let's go back on the 15 minute. And let's go to the next day. Where's the next day? It's the 11th to 12. Let me go on the hourly. And let's see what happens the next day. 1, 2, 3, 4. 4 here. 1, 2. Don't want to stop here. Oh, 3, 4. Okay, we're at 8 a.m. Let me mark out. Let me go back to the 15 minute. And you can do the same thing for NAS and ES, but I do trade US 30, so I'm going to show you guys on the US 30. I highly recommend you come to this pair. And if not, I highly recommend that you use this pair to. I highly recommend that you use this pair for your real SMTs. That's a story for that's idea. That's that's something for another time. Now, here's another one. All right, it seems like we're still bearish. So what would my area be from here? Right, we have. Let me go to the 15 minute. Right, we had a we had a 15 minute. My bad. We had 80 session Judas swing. Um, that actually should be coming to get taken out. So what would I do here? Same thing. Mark out the HLOs. I will make sure that is already marked in red. London highs is here. What has already been taken out and what's already hasn't? Nothing's already really been taken out, so we don't need to do that. You can also mark out right where's your 830 to 930 high and low right here. 830, 930 high and low is put in here. We can make that. That's our orange one, so I know exactly where I'm at within that area. That's orange. And then what? We mark out our gain right here, and we mark out equilibrium. Put that in here. Make sure that's white, and now you have your idea of what you're trying to see for the market for the day, right? Oh, my bad. And you in your fair value gaps, I always say you go for them how you want it, right? You can either I prefer to really just do one because in reality we have all these fair value gaps here. You can either just do this one. You can do this one right here if it's above that high. Um, since that is what the heck? I don't know why I did that. I did not. Did I 2 seconds? I don't even realize I did. Right. So even if we were to go short, I'm not going off rip. I'm not going short unless we hit here. And this is it's a discipline thing, right? Because it'll tell you that like it's a way of truly kind of following your a rule and just a fundamental rule, especially if you're trading ICT, to buy and discount, sell and premium. So you know the area that you want to sell at. You know the area that you want to um buy at, right? So you're not going to take no trade if it's down here. And for one, it will be you will even if you miss a trade, it will increase your win rate and your profitability by a ton. Why? Because you're already giving you that rule of thumb that you need to hit this or be above here if I want to short this market, right? Let me see something here. Over on Wednesday, uh, right. And this is Tuesday's highs and lows. Oh wait, we're on Thursday. My bad. So Thursday, Wednesday, right? This is a Wednesday high and low that's already been taken out, which is here. So you can already go ahead and my bad. I don't have a preset for that, but that's the one. That's the liquidity is already taken, right? So you can already mark that out so that you just are well aware that this has already been taken. And if you are bullish on the day, this could be a level that you could want to come back to if you want a bigger profit. Or what's so good about like even this, if I'm bullish, you have your bullish areas here. You're way below the deep discount. So this, like I said, bro, it's for your these are your reference or whatever little points you want to call them. They're right here, right? You know exactly where everything is at. You know what's been taken out. You know where the session liquidity is at. You know where your fair value gap is at. You know where your equilibrium is at. This is how you want to set up your charts every freaking day that you come into this market. I promise you, it will save you a ton. It will save you for just not being lost and where you actually want to see stuff just be at. And like we said right here, it's already been taken out. Do you want to change this up? No, you don't want to. If it's already been taken out, it's okay. Sometimes we'll come back to this area and then get a little sell to maybe go short again. And look at that, we go short again, right? What was probably right here? Was there a fair value gap here? I don't think so. Hold on. I didn't check this fully all the way. My bad, y'all. There's a 5 minute here. Is there? And let's say you want to move out the 5 minute. Boom, you have a 5 minute fair value gap in the equilibrium. That's what it's targeting, right? So you can use that. I don't have the higher time frame, but let's say you was catching. Let's say you was catching this move. Um, there's a hidden SMT right here where bodies didn't close above it, but the body closed on this one. And I think, yeah, we closed on this one, but in Q did not close above. So what does that give us? If you know what quarterly theory is, I trade that personally. That is a quarterly theory hidden SMT, where if the body doesn't close above it, it's not that is still considered a SMT. Um, and if you want to use more stuff, let me see. Right, we have another big one right here from this high. I think was this. This is 938. 938. Is that the same one over here? So yeah, there's look. No, it's not. What was right here? Let me go here. Oh dang! Why did I press that? Let me go here. This is like old. I don't have these chart colors no more. But if I were to look, let me see where this SMT was at. Show. Oh, that's on Friday. Let me go to Thursday. I did not mean to make this video this long, but I had a feeling it was gonna kind of be because I'm gonna show you guys examples and stuff and try and make sure that y'all right here. You know what I'm saying? So let me put my crosshairs back on real quick. That's why I was like kind of struggling. Oh wait, it is on. Passy's not up. I don't like that. It's like it's just a super bright ass thing, and it don't look professional when I'm trying to show you guys like make a educational content here. But if we look at this, let's see where we had the SMT at right from this high here. So this high does take out that high. There's no swing point put in here. Can't use that. Can't use that. So our only little area is this one, right? This is where our hidden SMT is at. It's here to here, right? We don't close above it. Hidden SMTs is when the body count closes above. I mean, doesn't close above that swing high or low that, and that still kind of makes it lagging. And that's to me, those are higher probabilities because that shows one pair is rejecting that, and the other pairs on the, as you see, continuing lower. So let's say yours was we hit this area SMT. Um, let's say what is this? Is this is not the macro times displacement down lower? You have this shift right here. There's no retrace. It's not really an entry right here. We'll get an IFEG. Let's say you entered off that. You probably want to use standard deviation because this is like a power of 3. And let's say you get this IFEG. Let's say you was right here. Can we hit down here? Or you probably put your stops maybe above this. Target 2R. That's all you need. Session liquidity's already been taken out, so what would I already do? Session liquidity already taken. You can do the same for this, or you can get rid of this, but liquidity has already been taken. If I'm bullish, I can come back to these levels. If I'm bullish, I can come back to equilibrium. Let's see, do we go down as -4? I don't think we to see. Oh yeah, come right back up. We don't go down here. Then okay, so we have this market structure shift here. Do we come back and take these lows or the retrace that should have came a long time ago, which to me is not valid. I feel like with the market structure shifts, they need to come back immediately. If it takes this long to come back, I wouldn't come back to it, but hey, you can, because it still plays out, like it still does. I personally don't like doing this, like, because to me, I rather it's not trying to be perfect with it, but it's just like you rather see that kind of reaction. You know what I'm saying? We push up, make people think that we want to probably buy here, and immediately short it right back, and boom, right? So let's say you was here, you can come back and target these lows, and boom, we come back and target. Can we come down here? They not letting us come down here, boy. Ah. Oh wait, hold on. Let's see. Nah, it's over with. Okay. I had a feeling. I thought we came down here. Now let's say, all right, boom, we're later in the session. We finally hit that 15 minute. Does price want to react off here, right? Because sometimes that's where like sometimes you can trade after the 11, but it's not good. It depends on what your strategy is. But to me, that part won't matter no more, just for the simple fact that we've already had our 9:30 to 11 a.m. run. But you can see like what can happen, right? We hit that area, then we go low, we'll take the rest of these lows. We come back to where the market structure shift was. Then we go and take these lows next. A little bit move up higher here. Then we come back and take these lows again. So set your charts up like this. These are how you should want to set up your charts coming into the New York session. So you know exactly where you kind of want to be positioned when you're trading. Every day you want to do this. And I promise you it will increase your win rate. What is I'm gonna point this out. What's the least that can truly happen when you're doing it? When you set it up like this. What it's least but it's common, right? So let's say your session liquidity was up here. Everything gets taken out. Let's say yours is right here. My bad. Sometimes, let's say you're bearish, the market will run this whole thing. And then come back to those levels. And which essentially what it did here, right? It ran those levels and ran all those levels, and then we went higher, and then we went shorter for going bearish, right? But sometimes even when you are trying to be bearish, it will run the highs first aggressively, and that's one key thing, right? Do not be scared when they get ran aggressively. That is just to start off running buy stops and to go lower, right? So hopefully you guys enjoyed this. I hope that this helps you a lot. I'm sorry to make this as a long video as it already is, but I think this is very educational. Um, and we'll be going on to the next video. My next video, I will drop my road to profitability again. Um, for my next trade that I take, whether it's a winner or loser, I want to make sure I show you guys the losses, not just wins. This is road to profitability, so you need to see the ups and downs with it. You know what I'm saying? So I am done trading for the week. I didn't hit no trades yesterday or today. I will be back next week. Um, and yeah, we'll go from there. Hopefully you guys use this. Hopefully this kind of helps you. Hopefully this kind of gets you a little bit more comfortable when you're in the market. And yeah, that's all I got for y'all. So see you guys next week. Take it easy. Have a good weekend. Um, go over how you did for the week, what you can improve going into next week, if you're going to trade into next week, and go from there. Um, I'll have more educational content for you guys along the way. I'll try not to make it as long as I made this one. That's just kind of what's going to happen when you're talking about trading. And yeah, you can go from there. So hopefully you guys have a good one. Stay blessed. Don't do no dumb shit. Take good trades while you're in these markets. And hopefully I have more education content for y'all in the future, so I can give you what I wish somebody told me at the start.